Let's get us started with the basics of your personal finance. On a monthly basis, you have your income and you have all of your expenses. If you subtract your expenses from your income, what is left is what we call margin. And margin is the most important number that you can think about. We are going to constantly talk about margin throughout this whole course, and towards the end of the course, once you actually start dealing with our Google Sheet templates and you actually start calculating numbers for your own life, you will exactly know why. This number, margin, is something that we always want to be positive. So we always want to have money left over at the end of the month. So when we get paid and when we pay all of our expenses. This is the very basics of your personal finance. Now we want to think about why this margin is so important. The reason is your whole life happens in this margin. Think about it. When we say expenses in the previous formula, we mean all the boring stuff in life. We mean your rent, your mortgage, your utilities, your bills, whatever you have, if you have loan payments, all the things that are super boring and you don't really care about and they don't excite you. Everything fun and everything real that happens in your life happens in your margin. So if you think about going on vacations, it's only enabled by your margin, not by your regular expenses. So your margin is everything. Your home, when you think about it, when you want to think about buying a home or at some point, I don't know, maybe changing your home, it's all in your margin. If you have margin, you can think about that. If not, it's very difficult. Your kids' future, all the nights out with your friends and having fun, your hopes and dreams and plans, everything that you think about financially, they are all in your margin. So that's why your margin is super important. The larger our margins are, the more equipped we are to make good financial decisions and bad ones. We are going to talk about that. So that's why your margin is super important. It's basically all of the fun stuff, all of the good stuff in your life. Looking at the formula that we talked about, it's very simple. You have income and expenses. So in order to increase your margin, you have basically two ways. One is to increase your income, and the second one is to decrease your expenses. Those are the only two ways. This is quite simple, right? Let's break this down into an actual monthly cash flow of you, if you're an individual or your family. So in this particular scenario, we are talking about a household with two incomes. So imagine income 1 and income 2 coming in, whatever amount they are. And if there is any additional variable income that comes in, I don't know, if you get paid something extra outside of your regular work, or if this is something that, I don't know, you borrowed money to some folks and then they gave you back your money. So some variable income might come in as well. So that gives you all of the income that your household has in that month. Out of this income, we first have a portion of it being spent on something that we call fixed essential expenses. So when you want to think about it, think about everything that is required for you to just keep your life afloat. This is, as the name suggests, this is just essential expenses. So you want to think about your rent and mortgage. You want to think about your transportation costs if going to your job requires that. You want to think about your basic grocery stuff, like the amount of food that you need to kind of stay alive, basically. And then all the other necessities that exist. So keep in mind, we are talking about essentials. So your Netflix subscription is not in this category. Your going out and having food and going to restaurants is not part of this cost. Everything basic that you need to survive. So think about it this way. If for whatever reason you lose your job tomorrow and you have to just sustain your life until you can find another job, what is your bare minimum expenses that can keep your life going? That is what we call the fixed essential expenses. So once we pay that amount out, then what we are left with is our margin. And this is what we talked about. Out of this extra money that we have on a monthly basis, this margin, then we also have additional expenses. We have what we call variable expenses. So now you need to include, okay, all the restaurants that you want to go out, all the fun that you're going to have with your friends or family or anything like that, all the additional kind of entertainment that you spend your money on, all your subscriptions, all of the things that are basically your lifestyle. They are on top of your very, very essential expenses. Those are the additional costs. So those are another part of what goes out of your margin. And then if you are good at managing your money, then you also have a portion of your margin going into saving and investing. If you don't have that today, don't worry. This is all we're going to talk about from now on. So we're going to dive very deep into this topic. And this is what we want to get into. We want to understand how this works for each of us individually. A couple of things that you need to consider with this very, very simple formula is you have two levers, income and expenses. What happens in reality is, for whatever reason, if your income goes down in a month, so imagine that you had a few sick days in a month, right? So you get paid a little bit less. I don't know, maybe let's say 500 kroner, 1,000 kroner less per month. First of all, think about, would you even recognize that at all? Would that even register on radar that you got paid 500 kroner less? And after you think about that, think about this scenario. If your income goes down for whatever reason, whether temporarily or actually like it goes down for a good period of time, and you don't adjust your expenses, so if you keep your expenses the same but your income goes down, then it essentially means your margin is going down. But a lot of us are not sensitive to that. So if our income goes down a little bit, we almost never adjust our expenses. And that means our margin will immediately go down. And that is not a good thing. That's what we don't want to do. So be careful of this. If your income adjusts and changes, you need to adjust your expenses based on your income. You need to be more agile. You need to really think about it. And the second topic that you want to be careful of is the other side of this. When your income goes up, we automatically do the opposite. We actually do increase our expenses very immediately. So think about this scenario. It's the end of the year. Your company decides to give you, for some reason, 10% increase in your salary. Now think about what you actually go through in that process. As soon as you hear that you're going to get 10% raise in your salary, you are going to spend 10% more. If you are a very logical person, you're going to start thinking about, okay, now I can spend 10% more on my housing, on my car, on my going out and having restaurants, on my fun, on my everything. And then you start increasing all of your expenses, if you're very logical, by that 10%. But then you are missing out on a lot of other stuff. So you're not considering that 10% is actually gross income, so you're gonna pay tax out of it, so it's not really a 10%. And then you don't consider that it's gonna be inflation. Like inflation is gonna hit you in the new year. So everything is gonna cost a little bit more as well. So you don't consider it. So if you consider all of those factors, the increase that you got was maybe like 2-3%, but now you have increased all of your expenses by at least 10%. And that means that you have effectively decreased your margin in the new year just because you thought that you're getting paid 10% more. And this goes further than that as well. If you actually get a promotion and your salary raises more than this, everyone automatically does that. So if you don't pay attention, if you don't know your numbers, this is automatically going to happen. And your margin is going to go down. And that is what we don't want to happen. So be very careful. This is what we call lifestyle inflation. If your income goes up, you don't necessarily need to increase your expenses as well. You need to be conscious about it. You need to understand how your margin is affected. Everyone thinks what makes you rich is your income, Whereas that is completely incorrect. What makes you rich is your margin, not your income.